to continue our professional life in UAE, it is very, very important to understand how the accounting will take place in UAE. So today we are trying to educate all the students or the people who are planning to shift to the finance department. So what we have to learn here. So what is the agenda that what we have to learn? One is we have to learn the ERP, that any one ERP, which is real time business transactions. So learning ERP in India, in the institutes, okay, by taking some sample general entries and running when we are going to the job, you cannot perform. The amount what you paid or the time what you invested, no use. Right? So you need to learn practically with the real scenarios only. Real scenarios only. Why real scenarios? Students, I'm audible?
Yes, sir, audible.
Thank you. So here what we are understanding, learning the ERP in the educational institutions or computer-based institutions, no use. Because here we must understand the real-time business transactions and real-time reports. Real-time reports, first point. Second thing is an UAE VAT. If you learn the VAT in India, the concept of the VAT in India is different. There's no VAT now. But even though if you learn, the faculty who is there never visited to UAE, not practically is doing something, he is continuing there, then no use. Here you need technically, here UAE VAT is divided geographically. One is the free zone, second one is the mainland. And the transactions are defined locally by percentages, and we have accepted transactions and we have zero rated transactions. This has to be practically understand on which transaction it is a 0% applicable and which transaction is exempted. Okay. And how to do the accounting for this is very, very important. Next is the corporate tax. From an accounting profit to taxable profit. The profit which we are showing on our profit and loss account is not the same profit we'll submit to the corporate tax, because the corporate tax is saying some of the expenses are allowed and some of the expenses are not allowed. So here we need to understand very clearly what is the difference between the accounting profit and the taxable income, taxable profit. So on the taxable profit, we pay 9%, not on the profit which we are showing in the P&L. And third one is the career growth, skill, roadmap, opportunities. Today we are going to discuss. So what is important here? Practical learning, and the expert faculty should be there. This is the basic right of the student to select a faculty professionally, right? And the UAE corporate tax. Next is the certification of completion. Yes, here we are giving you the, once you complete the certificate, the KHDA certification will be available, which is Dubai Government Authority certificate we are providing, which will help you to add in your CV for your career improvements. So career growth. So, and these courses are helping to increase the salaries. The many people will start the salary without knowledge that the basic salary they will start. So after completion of the course, once you understood the full mechanism of the finance department of the UAE, you can increase your salaries, you can shift to the job. So here from classroom to UAE financial career. So today's goal, what is today's goal? What we will do today? What we will understand today? So today we are trying to understand how an accounting become a real business workflow. Before corporate tax, accounting is accounting. We used to run for the receivable and payable only. But now it becomes a real business workflow. So accounting is, now we will learn what is workflow in accounts department and how that workflow connect to ERP and the VAT and the corporate tax. We have the authorities. One is accounting workflow. that accounting workflow, how we will fix in our ERP, the objective. Because before we are preparing, we are running the accounts without a system. Means we are preparing the accounting in the Excel. We are preparing the accounts manually. And our business is technically different. We are buying from China. We are selling to US. The goods are not coming to UAE. So how our business workflow will fit in the ERP? First, क्या करना है? First, we need to fix in ERP, accounting flow. Then, how that our business workflow will comply or will compliance, we need to satisfy with the VAT authorities. Right. So, and as per our business, which transactions are taxable, which transactions are not taxable, and how we can generate a VAT report from the software from the ERP. Okay. And third one is the how our workflow will help in generating the corporate tax return. Okay. So what we are trying to understand, first we learn what is our workflow as per our business. So when you are going for a job, you must understand what is the workflow of that company. Then which ERP is suitable. Next step, what we are doing, which ERP is suitable. Some companies will use Tally, some companies will use Zoho books, some other books. So here we will try to understand these things. Next is, by the end of this session, what you will be able to understand. Today, we will be understand, first one is read a business transaction and identifying the accounting impact. So, for example, salaries are there. Where it will impact? It will impact P&L or it will impact balance sheet. So what is the impact on the trial balance? So by this end of this session, okay, only 1 or 2 transactions we'll try to understand how the accounting workflow will impact on our financial position. So once you complete the full course, you will understand all transactions, all impacts of your business. Second one is enter the transactions correctly in ERP workflow. First, we'll understand the impact, how to book the entries. What is this transaction, where it is impact, it will come. In the step 2, how to book this in the ERP. For example, you done the accounting, you have a supplier invoice. You understood. Okay. You understood and you are saying you submitted the, you are saying like you submitted the, we received the invoice. We know that this invoice, sir, we purchased the goods and we received the invoice. Now how to book in the ERP? This is the objective now. So first what we are doing, we are identifying the transaction. We are identifying the impact. Next step, we are identifying how to book correctly. So most of the accountants, they will use JB. No, that is not an JB to book. Okay, enter the transactions correctly in the ERP workflow. Next is understand the VAT effect and the supporting document. Okay, so when you book the invoice, that is affecting the VAT ledger, that is affecting the VAT return or not. That's what we have to check. And when you are preparing the VAT, what are the supporting documents are required? Okay, that's what we will understand here. And here we'll understand the connect accounting profit to the corporate tax computation. So here we are doing the full accounting and we done our profit. We prepared the profit what we are showing. And we need to recompute the profit corporate tax computation, corporate tax liability we need to generate. So we need to recalculate the profits again. So today we will try to understand these things. So here today's framework is giving completely and build a practical skills roadmap for your finance growth. So you will understand how to manage a finance of the company. You will get a full roadmap. Okay, what we need to do, how to do, what to do. Okay. So next is here, what we will understand, what is our practical mindset. First, we need to have our practical mindset. The people who are practically having the mindset, they can do accounting. They don't have a practical, theoretical people, so they cannot run an ERP software. They cannot use. Okay. First, we need to have a practical mindset. First one is we need to understand what is the document. Okay, this document is a supplier document or our own document. This document for the goods purchased, or this document for the asset purchased, or this document for the expenses or service purchased. Step number one, we need to read the document. Once you completed the documentation, if you read the document, then you need to understand what is the accounting entry we have to pass. Which vouchers we need to book. This is my document. Which entry we need to pass. Third one is, once you frame the entry in your mind, how to post in ERP. These are the different, challenges are coming to our day-to-day life. Step number one, you need to have a document. Then you need to frame the entry in your mind. Step number three, how to post in the ERP. Okay, once you posted in the ERP, what is the impact on the VAT return? What is the impact on the corporate tax return? Right? And how to generate the reports. Once you generate the report, what decisions we have to take? Whether last month profit is more than the this month profit. What are the reasons? Okay, how to take the decisions. These are the very, very important. So what is the mindset we have to make? First mindset, the document must be there. Without document, don't pass any entry, right? Without document, no recording into the POS. And second one is the, once you got the document, you must understand what entry you need to book. So once you understand the entry, where to book it, where to post in the ERP, how to post in the ERP. Third one is, what is the VAT impact and the corporate tax impact reporting and decision making. So this is what we will understand today. Okay, with the some small scenarios. So I'm taking you the full roadmap as an accountant, what you have to do. If you know, that's well and good. If you don't know, yes, we are there to help you in training these things. So here we'll discuss in a 60 minutes. I will take your professional time to give you a roadmap. Okay, what is the roadmap? First, practical journey from source document to UAE compliance and the career readiness. Source document to UAE compliance means receiving a document to complete the corporate tax return. This is a complete roadmap. In between, how many authorities will come, how many banks, compliances will come, we'll cover everything here. Okay, are we ready for this? Online students?
Yes.
Very good. So now, first one is business accounting. We'll discuss, we'll spend 5 to 10 minutes here. What is business accounting? Next, we will understand the ERP practical flow, how the ERP will work practically. And here we will understand the what is UAE VAT, how it will work. Okay. Next year we will understand corporate tax, UAE corporate tax, how it will work, and integrated cases. John, recording is going on. Yeah. So integrated cases we will understand, and finally the career roadmap and question and answers. If we have, we can define this. So first one is an accounting in a real business scenarios. So accounting is not a debit and credit only. It is a controlled information system. Controlled information system. For example, we learn assets always debit. But it will be always debit? No. Sometimes it will be credit also. So what is the debit and credit? So generally, if you know, debit and credit is not accounting. Doing something debit, something credit is not accounting. It is a controlled information system. What information? Based upon the information will debit some items, and based upon the information, sometimes same item will be credited. Okay, clear? So first one is the source document. Okay, what are the source document? Sales invoices. Okay, supplier invoices, bank statements, receipts, payments, payroll, and the contracts. Very, very important. Okay, what are the source documents we must have? We must have the sales invoices, sample invoices. Next is recorded control. First क्या कर रहे हैं? We are collecting the documents. Step number 1. Okay, the bookkeepers. Okay, how to complete the project as early as possible. We are getting structured. We are taking the project and we are struggling to collect the documentations. So step number 1, you must have a source document. Second, step 2 is here, chart of accounts. Chart of accounts are very, very important. Okay, so you need to define the chart of accounts and you need to create the customer ledgers. You need to create the vendor ledgers. And when you are creating the customer ledgers, when you are creating the vendor ledgers or the contacts as per the ERP or chart of accounts, you must define the tax code. You must define the tax code. For example, when you are creating a vendor, the vendor from India, we are in the UAE. So we must define the supplier from outside UAE. If you are not defined that tax code, tax impact will not come. Okay, impact will not come. So what is important here? Defining the tax code and cost centers and the branches. If you have any caste categories or if you are maintaining the multiple branches, multiple department or project-wise accounting, if you are doing in a construction company, okay, if you have a 2 to 3 branches, okay, centralized accounting system is there, you must define the cost centers. Cost centers will help you to allocate the salaries. For example, Numan is here, his salary is 10,000 dirhams we are paying, right? So, but he is working for 3 companies. He is giving his time for the 3 companies. He is booking the accounts for 3 companies. So his salary should be allocated for 3 companies. How we can do that? That is yes possible by defining the cost centers or a branch account. If you have a different branches, yes, branch accounting and the approval systems and the reconciliation. So what we are doing here, we are maintaining the records and we are trying to control the scenario as well. And the third point is report side compliances. Reporting and compliances. So here, what is the reporting here? We'll generate the trial balance, we'll generate the profit and loss account, we'll generate the balance sheet, we'll generate the aging reports, customer aging, supplier aging, inventory aging. These are the very, very important report and how to generate a VAT return and the corporate tax return and the audit trail. Okay, so this is the part of every accountant must to know these things. So part of our course as well we are training. So what we will do, we will show you the real source document of the companies. Okay, and we will train you how to define the chart of accounts. When you're defining the chart of accounts, how to define the tax code. We'll do all these things in the different ERPs. So here, the employable accountant can move confidently across all these stages. So every accountant must complete these stages to complete his job. Okay, here we are your career success partners. Okay, so we will guide you in each and every step how to complete these 3 stages. So how many stages are there in real business accounting? Only 3 stages. And next is, okay, your value increase when you understand the transaction. In the business, your value automatically increases when you know the system. Okay, this accountant is very perfect. He knows Tally, very good. He knows Zoho, very good. The ERP entries, the tax treatment, and the final report together. So when in the company your value will increase, your value is increasing means your salary is increasing automatically. So what is important to increase your value, increase your goodwill? You must understand the transactions, means when you see the invoice. Okay, you must know familiar with the invoice. For visa, one invoice will come. Right, import invoices from other country we are purchasing. How can we identify? And what are the supporting documents are required? Only purchase invoice? No, a set of documents are required. Bill of lading, okay, and certificate of origin, insurance document, packing list. So what are the documents? You must have a knowledge If you are going for a free zone company, which documents will be there? How these documents will look when you are purchasing something. So that we need to organize the document. You need to check whether this invoice is proper invoice, correct invoice or not, genuine invoice is there or not there. So we need to understand. And the ERP entry, you must have hands-on experience. You must perfect in one ERP. How to book the ERP entries. Then what is the tax treatment and the final reports together means accounting and the compliance. If you are very good accountant, you have 20 years experience in UAE, but you don't know VAT compliances, you don't know corporate tax, you are zero. If you are good in ERP, if you are good in accounting, if you are good in VAT, if you are good in corporate tax, then only you are a professional accountant. Otherwise, you are a data entry operator. Clear? So next is ERP practical order to cash approach. Okay, when we are receiving from order or we are giving from order to till the payment, the accounting cycle, how it will take in ERP. Okay, for example, if we are talking about Udo. The system of accounting cycle is different. If you are going into a tally, the system is different. So here what we are understanding for any ERP, our target is to, when the ERP will come in front of us, we must be in a position to complete the accounting cycle from order to cash. Okay. So when order to cash, example, ABC trading sell goods for 10,000 plus 5% VAT on credit. ABC company sold 10,000 worth of goods and we collected 5% VAT on credit. So what is the accounting cycle here? Step number 1. First, what we will do? We have to do this in ERP. What happened? We sold 10,000 goods to one company, 5% VAT is there and credit be given. So step number 1, what we will do? In the step number 1, we need to create a customer masters. Okay. Step number 1, we need to create the customer masters and we must check the TRN number and we must fix the credit terms, whether it is on cash, whether it is 30 days credit period or if there is 30 days credit period, 90 days, you need to define and you must have a contact. You need to integrate the contact of these persons. Step number 2, once we created the masters, so we need to create a sales invoice. So we need to generate a sales invoice. So order to cash. So revenue is 10,000. Okay. And very important step number 3 is this called as an output VAT. How much output VAT? 5%, right? So 500 output VAT is coming. Okay. Next is step number 4 is it becomes receivable. Customer owes us to pay 10,500. Step number 5 is for the collection. Collection means bank receipt plus allocations. This is called order to cash. Order to cash. So this is called as a reporting. So here sales register, VAT report, AR aging means accounts receivable aging, and the profit and loss account. This is a complete accounting cycle from order to cash. Same thing will be there order to payment. In the order to payment, you need to create the supplier master first, vendor master first. When you are creating the vendor, you must define the country as well. Because if you are defining the vendor from other country, what impact will come to the RCM? What is RCM? How to book the RCM? That we will learn very practically. Clear now order to cash. Step number 1, we need to create the masters. Then we need to create the invoice. Then we need to charge 5% VAT, that is called output VAT. Okay, then it will become receivable. Then book the receipt to collect the money. If you not receive the money, generate the report AR aging. Clear? So journal effect, debit the receivable 10,500 and credit the sales 10,000 and credit the output VAT 10,000. This is the general entry. Okay. So next is procurement to pay. That is order to cash. The procedure you must know as an accountant. One cycle is finished. Second cycle is procurement to pay. So purchase to payment. Purchase to, there are two accounting cycles. Okay. So example, office rent invoice 20,000. Office rent invoice is 20,000 plus VAT 1,000 and paid later by bank. We not paid now. We paid later and we paid by through check or we paid by online. Okay. So now this is purchase or expense. Okay. Purchase expense. So choose the correct ledger and the supplier. Capture the invoice date, invoice number, VAT details, and the branch or a project. Branch or a project. Next is there is an input VAT on the sales we discussed output VAT. On the purchase it will come input VAT. Input VAT is nothing but the recoverability depends upon the VAT rules. Whether it is recoverable or not recoverable, we need to understand the VAT and a valid supporting documents and do not treat every VAT amount as automatically recoverable. Don't think that every VAT we have the invoice, book, cover, recover. No, not possible. Okay, you must have a check here to check. Next is the payment to payables. So here create a supplier liability and then settle through the bank or cash and the reconciliation supplier statement and close with the bank account. So typically what will the entry will come? Rent expenses debit, input VAT debit, credit, supplier payments. So here you need to have a clear 100% clarity on every ERP because every ERP, the method, the system, technology is different, process is same. One example I can give you, some ERPs are called as a supplier, some ERPs will call as a vendor. Some ERPs called as a sundry creditor. The term overall, the target for all the ERPs is to build the balance sheet. But some ERPs come to the VAT compliances. For example, zero books if you are using, there is no VAT because that is not an ERP for UAE approved ERPs. You must learn approved ERPs. What is the meaning of FTA approved ERPs? Means all full VAT compliance is integrated in the ERP that will check also. If you are doing mistake, it will give you a reminder or a notice that you are doing this. Tax is not matching. Tax is mismatching. For example, if you are going for a QuickBooks, if you are taking a UK edition or US edition, tax will not work. Okay, so you need to have a proper understanding of the compliances. So control. Next is UAE VAT, when an accountant must to know, what one accountant must to know. Focus on the transactions, classification, documentation, timing, and the reconciliation, not only 5% calculation. So generally here accountant will say, I know VAT. 5% only, no sir. He will pay, he will open one Excel sheet. Okay, he will record 5% what we paid and 5% what he. But when audit will start, at that time they will understand real how what will work. So today here we are trying to educate in a small short time the focus. So classification is very, very important because classification means the import of goods we need to classify. Whether the import of goods, the custom paid 5%. So what is the treatment? Custom not paid, what is the treatment? Okay, classification of capital goods. What is when we purchase the fixed assets? Because when we purchase, this separate category is important. In the VAT form is not there, but in your ERP, you must have a separate category because there is an extended treatment will be there when they sell the asset. Okay, so these are very, very important, the classification and what documents we need to maintain. So 5% standard rate, many taxable supplies are subject to 5%. We are not saying all. Okay, we are using the word many taxable supplies are subject to 5% VAT. Always confirm the nature and the place of supply. It's very, very important to confirm the nature of account. Right. Then place of supply. Simple what the people are doing. They are going to the invoice, the bill, they are booking, khalas. VAT is claiming. No. There should be a proper classification should be there. And the registration. It's a mandatory threshold for registration. The VAT is 375 and the voluntary threshold is 187,500 for eligible UAE resident businesses only. This is also very, very important. Means when you can register, if you reach the turnover 187,500, you can register voluntary. There is no fine. It's not mandatory to register. But once you reach your income 375,000, you must register. If you not register, there is a
187,000 you have to reach, but it's not mandatory to register with the VAT.
no only taxable sales turnover, or if you have the expenses of which you paid already VAT.
Okay.
Rent, for example, if you have 200,000 rent invoice with you,
Yes.
you can register because we need to claim.
Yes.
So registration will be done based upon the incomes and expenses. No need to wait that your sales will be reached 187,000. It's yearly. Last previous 12 months, not yearly, the preceding 12 months. Now we are in the month of August.
August, yeah.
So July, you need to go back last 12 months. If you reach, you need to register. So it is in a wrong opinion that last year I don't have 37. No, not last year. This is preceding 12 months. From today, what is happening in the 12 months and next 30 days also mandatory FTA will ask. Only one time you reach 187,000 in next 30 days, there is no going concern concept. So FTA will not approve your TRA. Okay, we need to show them the next is the VAT return logic. So output VAT on taxable sales minus recoverable VAT, input VAT. Output minus input, so we will understand the net VAT payable or refundable subject to the law. So this is what about the VAT accountant must understand. So VAT working papers and disciplines. So here reconciliation of sales to output VAT. You must reconcile your sales with the output VAT ledger. Reconcile purchases to input VAT ledgers. Review zero rated or exempted or out of scope separately. So you must have a separate ledgers or separate tax code. How you will do that is very, very important. Don't mix only one sales ledger. Okay, if you are maintaining only one sales ledger, your system, your ERP must be capable to categorize or classify these transactions as zero rated, exempted, taxable, and out of scope. Check the tax invoices and the credit notes. Okay, and tie the VAT return back to the journal ledger. Must match with the general ledger with the VAT. So let us understand one small case can be built in a VAT return on. Okay. So here what is happening? What happened here? Supplied classroom example. Okay. Assume all listed input VAT is recoverable. Okay. Now I given you the transaction here. Standard rated sales 120. VAT is 6,000. Output VAT zero rated. Taxable purchase, other eligible expenses. So students, anyone can give me whether in this case VAT refundable or VAT payable, how much? Okay, can you calculate? What is the receivable and what is the payable for the VAT? How much? In this case, receivable and payable. Total answer. Students. How we will build a VAT return? So 3000 is payable. What is the formula? Output minus input. So net VAT is, here we need to understand, output VAT 6000 less input VAT 3000, VAT payable is 3000. So like this we need to calculate the VAT transactions. So which report in your ERP should support these figures? Form 2010, where you will find VAT reports. Okay, so don't generate these figures from the balance sheet or don't generate these reports from the P&L. Where we will find? We will find a separate VAT reports will be there. Even that report must match with your VAT ledger from the balance sheet. That is reconciliation. Okay, that will not match sometimes. Okay, next is the VAT is clear, right? And next is an UAE corporate tax, from accounting profit to taxable. So how to compute? The starting point is accounting. The starting point is accounting. Then the tax loss required to be adjustments. In the corporate tax loss, we will understand what are the adjustments. Accounting profit and the accounting profit from financial statement. Then the plus or minus adjustments, tax adjustment, allowed or disallowed expenses, deductibility or exempt or income, relief, etc. That we will discuss in detail in the corporate tax. So here we will get what? Taxable income. Accounting profit plus something minus something, the tax adjustment you need to do, then you will get a taxable income. That is after permitted adjustments. Apply the CT rate. So up to 375, the CT is 0%. There is no tax. Profit, not sales. That 375 per VAT is different. Here the net profit. Net profit means you taken the accounting profit and you done the adjustment. Then up to the 375 profit 0. More than 375, straightforward 10%. Yes, this is the profit amount. Up to 375, 0 tax. Tax payable. After eligible credit adjustment, you can pay. Okay. So now UAE corporate tax, we understood the VAT, how it will work. So let's take a small case. Okay, I'm expecting the online students will participate and will give the figure. Corporate tax mini cases here. ABC Services LLC for the year ended 31st December 2025. Okay, accounting profit before tax 650,000. Add non-deductible expenses 25,000 less exempted expenses 50,000. So what is the taxable income? 624. Actual, as per our profit and loss account, our profit is 650. In that, we are adding back 25,000. The expenses which is there in the profit and loss account, but as per the corporate tax, those expenses cannot be deducted from the profit. Example, fines you paid, you will debit to your P&L, but for the corporate tax computation, not allowed. You need to add back. Okay. Okay, the list of expenses we'll discuss in the syllabus. Next is exempted incomes. So now Miss Easter came to me and she given me 10,000 dirhams. Is it my income? But I have to record, no? Otherwise my bank balance will not tell. The money I received in bank. So we have to credit something. It has received. So I booked as credit side. My income is increased. That is not our sales. So in some cases, for example, I have another branch, another company, I invested in one company. He paid me the share of my profit. At the end, it will come to my bank account. I booked. So I have to pay tax again? No, because he already paid tax. After the tax only he will pay profit to me. So to avoid the double taxation, so you need to understand which are exempted. Dividend is the exempted one. Why it is exempted, how it is exempted, we will understand. So now profit is 625, right? Up to 375, 0. Balance 250,000, 9%, 22,500 is the corporate tax. Okay, small business relief. This is now updated. Okay, important up to 2029. Amendment is happened. Okay, small business relief is up to 2029. What is a small business relief? A eligible resident taxable person, if revenue is threshold up to 3 million for the relevant period, subject to conditions. So up to 3 million, you are eligible for small business relief. So we need to do the revenue test. Okay, so revenue test must not exceed 3 million in the relevant and the previous applicable tax period also. For example, last year, first year in 2024, okay, your income is 2 million. You are eligible, right? Small business relief because up to 3 million allowed. Now in 2024, your income is 2 million. Allowed or not? Eligible? 2024 में up to 3 million तक नहीं है, 2 million ही allowed है ना? Less than 3 million, right? 2 million. Our income is 2 million. We are eligible. 3 million तक allowed है. 3 million से ज्यादा गया तो SME relief applicable नहीं है. Up to 3 million, not exceeding बोले यहाँ पे. Okay, in 2024 my income is 2 million. I'm eligible or no? Yes. I'm eligible. In 2025, my revenue is 4 million. In 2026, again my income is 2 million. No, you're not eligible. Okay. Okay. So this is very, very important point now. This is third year. Okay. So now here, if your income one time you crashed in the previous return, if your income is exceeded 3 million, now income is no, you need to complete the full return. You will not get an eligibility for SMEs. This is a very, very important technical point. Next is time limit. This is up to 2026. Now it is extended up to 2029. This is applicable for everyone? No. Okay, it is not applicable for qualifying free zone person and certain MNCs, group members are not eligible for this relief. Free zone companies, that to qualifying free zones cannot take SME relief. They need to complete the full return because already they are 0%. Already for them, the corporate tax is 0%. So practical accountant's job is to identify the eligibility early, okay, and maintain the proper records and documents. The election, this is very, very important. Election means by default, you are not SME. You need to select when you are submitting the return, you must select that you are going to use this SME relief for this year. Okay, and the tax position correctly. So let us understand, think like an accountant. Now you need to think as an, now you are using the ERP and you are a VAT practitioner and you are a tax professional at the same time. So you need to have you need to think you are an accountant now and you are a ERP, you know ERP, you are a URP user and you are a VAT practitioner and you are a corporate tax professional because law is different. Every ERP is having a different logic, right? Some ERP is showing plus and minus. Some ERP showing debit and credit. Clear? So UAE company purchased a laptop for 5,000 plus VAT pays by bank. Okay, plus VAT and payment done by bank and use it in the business. He purchased a laptop and use it in the business. So what we need to understand? This is the transaction. Our target is to submit the corporate tax return. So what are the steps we need to take? Which ledgers we need to create? First step, we need to identify the masters and we must know the entries. Then we must know where to book in which ERP, how to book, and we need to understand how it will impact what. So this is going on in your mind. Okay, very good. If it's not going on in your mind, we need to do that. Step number 1, we need to do the accounting. Expenses are a fixed assets. What is the general entry? If it is an expense or if it is a fixed asset? Riyaz, is there?
It's a fixed asset, sir.
It's a fixed asset. Okay. How it is a
Because
fixed
we can use more than 3 to 5 years for the laptop.
Okay. Not like this. See, here he clearly mentioned to use. He not mentioned he purchased to sell. If he purchased to sell, that is an expense. Anna. So now here it's clearly mentioned to use in the business. So it is an asset.
Capital expenditure.
Excellent. It is a capital expenditure. So second thing is an ERP. Which masters? What is the tax code? Okay, it is zero rated or exempted. So from where we purchased? We purchased within the UAE 5%.
Yeah.
If you are in the free zone, within the free zone, out of scope. If you are buying from other country, reverse charge, RCM. You must define the tax code and the payment, okay, and account and the cost center. You need to understand. So first you need to understand the accounting, whether it is the expense or whether it is the asset. Next, we need to understand which masters we need to create, what is the tax code we need to fix, and from where the payment is done, and what is the balance amount at the cost center. So ERP we done. Next. What is the next? Anyone? Online? Just
We need
following
to
the class? Yes. So
We need
now
tax.
we need to check the VAT. So here is the input VAT recoverable or what evidences is required. It is the input VAT recoverable. What evidences are required, Riyaz?
First, TRN number and company name and the VAT.
No. As per this transaction only.
If it is purchased in the UAE, we have to check the if it is purchased in the UAE.
Purchase
If it is a
invoice.
return, it is not recoverable, right?
Yes. Okay. This is what important we need to understand. And fourth one is corporate tax. है ना? Corporate tax में क्या कर रहे हैं अपन? What is the treatment of corporate tax? If it is an expense, if it is an asset, who will help us? If it is a expense, what is the impact on the corporate tax? Whether it is an asset, what is the impact on the corporate tax? We need to learn very practically. When one invoice, one document come in front of you, 4 bulbs has to start in your mind. First, what is the accounting? What is the accounting treatment? Next, how to do in ERP? What is the impact on the VAT and how the corporate tax will impact income? Each and every transaction, 4 things you need to think. Okay, what is the impact? Riyaz. Who can help? What is the corporate tax impact on this transaction? We purchased one laptop. It's a depreciation, Faiz is saying. What to do? Okay. Silence is the right answer. So, how does the capitalization, depreciation affect accounting profit and the taxable income? If it is an expense, straightforward, it will go to the P&L. But this is not an expense, right? In this case, this is an asset as we decided because it's using. In that case, so how does capitalization, what is the procedure to book a fixed asset? You must know. After booking the fixed assets, that what is the impact of the depreciation? Depreciation will decrease your profit. Depreciation will decrease your profit, and how to compute the taxable income. So what we are understanding here, in one transaction, where do we have? One transaction में corporate tax का treatment भी आया. So एक invoice सामने आते ही 4 things we need to think. First, what is the accounting? In ERP, how to book? Okay, whether the VAT is recoverable, payable, or what? Then what is the impact on the corporate tax? Clear, Riyaz, is it the correct method?
Yes, sir. Clear.
Fourth method में problem दिख रहा, step number 4 में सबका problem दिख रहा. Okay, very good. This integration thinking, this integrated thinking is what employers and the clients actually needed. Now, this is the basic requirement of the UAE now. Okay, what is the basic requirement of UAE now? The integration. Integration of 4 different concepts. One, accounts. Second one, ERP. Third one, VAT. And fourth one, corporate tax. Clear? Online students.
Yes, sir.
Yes, sir.
Integration
Clear.
is very, very important. If you have problem with one, you will be suffer. You cannot complete your accounting job. Okay. Next is reports. You should be able to read and explain. This is very, very important. You not done the accounting, you know ERP. Okay, you know you're doing how to do accounting for VAT, accounting for car, you done. And you know how to generate the report. That is not sufficient. Okay, what is sufficient? You must be in a position to read. First, you must understand how to read in the P&L, how to read in a balance sheet, and how to explain. If you don't know this, again, you are not an accountant. Okay, so let us see now. ERP skills are valuable only when you can interpret the output. You know tally, you book the tally. Report at the samne. Owner said, can you explain me? You're laughing. So, no use. So you know tally, you learn tally, you cannot perform accounting job. So many ads we are seeing in the market, many people are learning. I know Zoho, sir. Okay. So where the balance sheet show me the balance sheet? I know Zoho, sir. So data entry is not an accounting. Okay. So let us see now. So ERP skills, learning only tally, ERP is not sufficient. Some online students, okay, we had on a call, discussed, they said, sir, why to join this course? I know tally. I know tally. I am using tally from long time in India. They can explain the reports here? No. They must learn the UAE VAT and the corporate tax. And here we follow IFRS. We need to book the books as per the international reporting standards. So doing, reading, and explaining is very, very important. So here, first report is trial balance. Okay. Trial balance is the ledger structure and the closing balance sets reasonable, right? So trial balance is the structure of your closing balances. Then you need to generate a profit and loss account, which is revenue, gross profit and operating cost moving. You can see the operating cost. So next is the balance sheet. Okay, what does the business own, owes, and the finance? So this is what we need to explain from the balance sheet. Next is the account AP and AR aging. AP and AR aging, this is the requirement, compulsory FTA will ask and banks will ask these reports. Okay, who owes us? Whom do we owe? How old are the balances? कब से है outstanding? Because we already paid. Customer is not paying now 6 months, now 1 year. What we have to do now? Okay, these reports first if you prepare. So as per this, before 6 months we cannot book as a bad debts. We have to wait to do the bad debt adjustment for minimum 6 months. And during the 6 months, you must take all possible steps which are important to recover the amount. Means keep on sending the reminder emails, keep on calling, or if not possible, you can go and you can file a police case. The evidence is here required. Next is the bank reconciliation. Why does ERP bank differ from the bank statements? बैंक स्टेटमेंट में एक बैलेंस रहता है, सॉफ्टवेयर में और एक बैलेंस. Why? So that is very important is the bank reconciliation and VAT and the tax reports. Okay, can every figure be traced to source transaction? So that means what figure you are showing in the FTA, you must in a position to track the source document. Source document means step number 1. बीच में का पूरा आ जाता है. Okay, this is very, very important and you must know how to prepare, how to read and how to explain these reports. What makes a UAE finance candidate job ready? So now we want to go for a job in the finance department. Okay, what makes you ready? So build a skill, not a certificate collection. So I am getting a message from some of the students who missed some sessions. So they need a certificate. So we can say marks are not the index of knowledge. If you are topper or something you don't know how to do it practically, no use. So you should build a skill. Certificate is secondary. Even if you are showing certificate from big institutions, they ask you to sit on the system and do it in the interview. If you're not doing, no problem. So certificates will not help you in the real scenarios. So first one is you must have a strong foundation in accounting. When you are going for a job for the UAE market, first क्या होना है अपने को? Strong fundamentals or with strong foundation in accounting. Step number 2. Okay, from journal entry to balance sheet, financial statement, journal, ledger, trial balance, and the final accounts. You must know how to prepare, how to read, how to explain to the owners. And next is ERP execution. You must know Tally, Zoho, QuickBooks, Udo, workflow, how these ERPs will work. Okay, what is the mechanism of these ERPs? Because you don't know and from where you will get the interview call, right? That company using Tally, what makes sure it is important. If you learn Tally, you can do the job only in Tally. But you got an interview, you pass the interview, but the company is using Udo. This is one more challenge. And if you understand the workflow, this problem will not, will happen. Otherwise, you have to learn all. First step is you first learn accounting, then you can learn all the ERPs. So many people are ignoring accounting and learning tally, how to raise the invoice, how to book the expense. These are the things they are doing. And next is UAE VAT. UAE VAT is invoices, tax code, reconciliation, and return support. Okay, these are the very, very important. Corporate tax. Okay, here the corporate tax accounting to the tax bridge. Okay, and the records and the computation support. Corporate tax. Step number 1, accounting fundamentals. If you have a problem with the accounting fundamentals, please complete. And the ERP executions, UAE VAT, and the corporate tax, and the Excel. You must have an Excel knowledge for the reconciliations. Cleaning. Reconciliation में क्या करते हैं? Clean करो. Cleaning, matching, schedules, and analyze. This is very, very important to the communication. Okay. So communication means explain the numbers clearly to the managers, explain the numbers clearly to the auditors or to the clients. Okay. Very, very important. Clear? The students who are trying to get the job, the 6 things you must have. Then inshallah you can get a good job. Okay, you can perform the job. So this is possible. Okay, so we are giving you on a 30 days practical action plan here. How to complete within 30 days. Okay, we are not dragging the things to many months. We are completing the course. Okay, the fastest improvement comes from repeated transactions to report practice. The speed will increase the practicing the transaction. Reporting. So 1 week we'll discuss in the first week accounting base, the fundamentals, 20 to 30 transactions, sale, purchase, receipt, payment, and expenses. Okay, we'll practice. Next week 2. First we'll understand accounting. Second week, we'll create a company. We'll define the chart of accounts. We'll define the VAT codes, and we'll define the banks, reconciliation, and inventory workflow. We'll practice in the week 2. Okay, and week 3, we will understand VAT reconciliation. We understand the VAT reconciliation, VAT plus reconciliations, build the VAT working, check the invoices, reconciliation of sale, purchase, and must reconcile bank with the VAT records. This is not happening. FDI is asking. बैंक से VAT का लेजर reconciliation होकर रहना जरूरी है. नहीं हुआ तो मुश्किल होती. Next is क्या है? Week number 4th week. In the 4th week, finalization plus CT. Preparation of the trial balance. We will understand how to prepare the P&L, balance sheet, schedules, and the basic corporate tax bridge. Okay. Next target, 1 complete mini company file. You can confidently explain an interview. Means after completion of the course, 1 mini company will give you. Okay. To practice, you should alone. You need to complete this 4, 5, or 6 steps, right? So 6 steps you need to take an accounting, define the ERP, use ERPs, and do the VAT reconciliation and finalize the corporate tax. Okay, so this is the method. We'll go 1 mini small company, which we can update in your CV, right? Practically you're doing. So you can explain the same thing in your interview. I'm the accountant for this. I used to do accounting like this. I used to define the chart of accounts. I used to do like this. Okay. So don't just learn accounting. learn how accounting actually works in the UAE. Okay. So if you have any questions, you can ask. Online students, anyone having the questions?
No, sir.
No. So
No, sir.
thank you very much for giving the time. Okay, we are going to start on a fresh batch on this Saturday or Sunday. So interested students can inform us to enroll the process. Okay, fee schedule and the syllabus. Okay, and certification, all these things you can contact us. We'll help you and we'll make you perfect. Okay, thank you very much, all of you.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you.